Welcome to ForexTV.com. Today is November 4th. I'm Tim Kelly with your New York Forex market buzz on Election Day. Dollar down sharply against the majors except for the Japanese yen. Now we'll take a look at the latest headlines from the CEP news desk. The U.S. Census Bureau's factory orders report came in lower than consensus forecast in September, decreasing by 2.5% against the market expectations of a 0.8% decline. The prior month's index was revised to show a decline of 4.3% from the previously reported 4% loss. The worse-than-expected factory orders report does not help the state of the U.S. dollar. Dollar falls alongside the Japanese yen amid the resurgence of risk appetite. Eurozone producer price inflation came in lower than expected for September at 7.9% year-over-year, down from both the 8% level expected and the 8.5% rate seen in the 12 months to August. Many economists see no reason why the ECB won't lower its main refinancing rate on Thursday. And in the overnight session, an unexpectedly large rate cut from the RBA was the main highlight of the Asian session. The Reserve Bank of Australia went against expectations and cut rates by 75 basis points to 5.25% today, despite forecast for a softer 50 basis point cut. Today we're joined by John Person, President of National Futures. John, welcome to the program.
Thanks for having me, Tim.
Well, a lot going on today, John. You and I had had a discussion regarding the market's volatility and what we expected to see before this election. It hasn't really turned out that way. I think we've now got record gains in euro against the dollar. At this point, what do you make of this volatility right now, and when do we see it? Does it end tomorrow when we get a decision on the presidential race?
Well, that's a good question. If we will get the results tomorrow from the presidential election race, we now have set a precedent of whether or how long it will take for results to come in due to the last presidential election. But hopefully there's no Chad issues down in Florida this year. I think right now the volatility, today's price action started overseas. U.S. equity markets opened up with a bang. This relief rally, I think, it's obviously transpired into dollar weakness as well. We see OPEC making decisions on cutting production. Crude oil's up sharply. Gold's up sharply. I think that a lot of these markets, Tim, are coming back to normal levels. The euro currency fell from that 160 mark down to the 123 low change area, a little too far, too much, and I think that's what we're seeing, some covering into positions ahead of the election. And also, more importantly, I think it's based on news and economic news that maybe things aren't as dire and that there could be recovery due to the global monetary and fiscal policy changes that we've seen in the last 6 weeks.
Well, John, so you're telling us now that you're telling me that you think this is simply a correction or a retracement, or you think that we're going into a new level, or we're going to regain some of those levels? Are we going, we're going back to euro at 150?
Here's what I'll tell you that I've been telling people for several weeks. There's two things that you need to look at, or three things in the markets. A, keep aware of what economic reports are coming out, number one. Number two, have a good idea of some type of plan based on technical analysis. And number three, follow seasonalities of markets. And in the foreign currency arena, there is, and most people may not be aware of this, Tim, and your viewers, but most foreign currencies actually do follow a flow of seasonality tendencies. And if I told you 4 weeks ago that on or about the third week of October, generally speaking, in the last 10-year history with the euro currency, it bottoms out and rallies against the U.S. dollar going into year's end, that would have been very helpful information to your viewers, because it's about the same time frame that we've seen a bottom so far in the euro currency. And I am expecting the seasonality to continue to play going into year's end. How high will the euro currency go? I would say easily we could see a re-challenge of the upper 130s. I wouldn't say 150 this year, not in the next 8 to 10 weeks. But, Tim, I think, honestly, we could probably see between 138 and 144 range challenged one more time in the euro currency by year's end.
So let's talk about yen, John. Yen right now is running counter-cyclical, right? And many think that the euro-yen cross is a good reason why yen has not given ground to the dollar. What do you make of that situation?
Actually, believe it or not, the Japanese yen is not and has not really challenged or gone contra seasonality. The Japanese yen, if you look at the seasonalities from midsummer into October, has moved exactly the way it has been moving. The problem is that with all this political, geopolitical, fundamental banking crisis, confidence crisis, whatever you want to call it, one week to the next, the crisis has evolved and manifested into different names. It was a banking crisis, a confidence crisis, etc. But I think that the Japanese yen, the move was obviously magnified due to these issues. What do we do from here? I think the Japanese yen, due to the fact that they also cut their interest rates, you're going to see that market, the volatility, probably die in the next 6 to 8 weeks as well.
John, let's talk a little bit about commodities and inflation. You and I had discussed that a little bit briefly prior to coming on today. Widely held belief that we're heading into a deflationary stage. You don't necessarily agree with that, do you?
No, I don't. I think we've deflated from absurdly high prices. Let's put it that way. I mean, if prices continued on the toward path that they were at, Tim, with crude oil exceeding 150 a barrel, with gold pressing over 1,000 ounces, I think the world would go out of business. Right now, supply demand dictates prices. But one thing I think listeners should be aware of, that they're not just, fighting the tape. They're not just trading against speculators. They're trading against foreign governments, such as CITIC, which is we talked about, and I think it's important for your viewers to know that CITIC is an investment arm of the Chinese government, and they're trading in the market. When you trade, governments are trading and taking positions in the market on a speculative basis or a hedging basis. There's going to be just insane volatility, and we have seen that. So when crude oil prices come back down into $70, I mean, just about 14 to 9 months, between that span, between 9 and the last 14 months, people were freaking out with $70, $80 a barrel. Now we're seeing sigh of relief. Gold prices at $750. Look at the grain complex, the meat complex. Look across the spectrum of markets, and you'd say to yourself, wow, these are really high compared to where we were in 2007 and 2006. So I think, Tim, that it's not a deflationary. We've just taken a lot of the speculative bubble out of the market, and we should start to return to more fundamental supply and demand side trading going into 2009.
So really, the metals and energy component is what you're referring to at this point?
Correct. I mean, here's another market analysis that I look at, spread trading. And I look at the spread between gold, silver, and I also look at the gold platinum spread. I mean, if you look at the gold platinum spread, when gold was nearly $1,000 from peak, platinum over $2,400. We had a $1,400 spread. If you look at that spread right now, we're back to historic normal tendencies where we're about a little over $115 on a given day. So looking at platinum as an industrial metal used in catalytic converters for cars, obviously the speculation bubble in platinum has been totally eased out. And I think that right now we're going to go and trade more on fundamental basis. I don't think we're going to see, obviously, with these demand or supply side commodities, we're not going to see GDP from foreign countries exceeding outrageous numbers. We're not going to see negative growth. I think we're going to see slightly slow, obviously slower than expected growth. But with employment where it is, Tim, right now, 6.1, even if we climb to 7% by middle of 2009, we're still going to be dealing with a fundamentally sound economy, not only here in the U.S., but also abroad.
Well, John, you've anticipated my final question and follow-up question is when do we see the volatility? You said earlier in the interview maybe 8 to 10 weeks, and we'll return at that point to valuing the markets on fundamentals. Is that a good time frame right now, as you mentioned, for the individual trader trading against players such as CITIC, and if in fact the Chinese government is behind that is officially not the case as it comes out from CITIC, citing, and of course you're referring to those huge losses in the Aussie dollar bet. But
Also the euro currency versus U.S. dollar. In fact, a major story broke in the Financial Times on October 23rd and 24th regarding CITIC's connections with the Chinese government.
Well, John, thanks a lot. Listen, we're going to leave it there. Thank you very much for joining us. This has been your New York Forex Market Buzz with John Person of National Futures. I'm Tim Kelly. Join us later this afternoon for PM Exchange.